The strategy I'm about to share with you in this video is one that guarantees you 99% winning rate, yet very few traders know about it. It's so easy to use that even a newbie trader can make use of it and get profitable. So watch this video to the end and you'll be glad you did. If you haven't subscribed to my channel, kindly hit the subscribe button, turn on the notification bell so that you don't miss out in any of my videos. So without further ado, let's go into the video to explain how this strategy works. This can be used in any time frame, but in this video we are considering the 15 minutes time frame GBP JPY pair. Looking at this, we find out that this market is range bound. From this point, the market has been moving between this resistance and this support. I'm various to say that the market has not been able to close above any of these two levels for a while. So the market makers know that buyers will always be at this support waiting for buy opportunities, while sellers will be at this resistance waiting for sell opportunities. That being in their mind, what they now try to do is to hunt the stop loss of those who are either buying or those that are selling. So in that case, we'll be watching out for a fake out. That is why this strategy is called fake out trading. And that is what happened at this point. All the while price have been closing below this resistance line. However, there was a breakout at this point with this bullish candlestick, but that break was immediately followed by this bearish candlestick which closed below this resistance line, which was just broken. This signifies a false breakout or a fake out. Now, that is the secret of this strategy, that whenever there was a range and you experience a breakout and the immediate candlestick after that breakout returns into the range, closing below resistance or above the support, it is an obvious fake out and you should take a trade in the opposite direction of that fake out. So in this very example, we have seen that there was a fake out to the upward side, so we are going to take a sell position with our stop loss just above the fake out top, and then our take profit will be the bottom of the range, and then possibly expect a breakout to the downside towards this structure, this market structure. So we're going to see how it plays out in this very trade right now. 30 minutes later, we can see that the market has just played out as we have just identified, that the price continued moving down after this fake out, and it went to the bottom of the range and broke that bottom of the range and has just met the market structure that we talked about. So this is a very easy way to make money in the forex market without much sweat. So just a recap: once you see a market in a range, wait for a false breakout either to the upside or to the downside, which is signified by a candlestick closing above a resistance or below a support, then another candlestick following up immediately to close back into the range below the resistance or above the support. Then you take a position in the opposite direction of that breakout, which is a fake out. Thank you for watching, and I hope this serves you well in your trading. Do not forget to make your comments in the comment section. I would like to hear how this strategy is working out for you. Subscribe to my channel and hit the notification button so you don't miss out my latest videos.